Okay, well, here he is. Let's get to Antoine Halff. He's chief analyst at Kairos, former chief oil analyst with the International Energy Agency. He has been drilling into global oil inventories. Antoine, thank you so much for joining us.
Thanks very much for having me. It's good to see you.
You have a fascinating piece of insight for us here. You say that if you look at global oil inventories, they're still apparently way up compared to before the pandemic. But outside China, the stockpiles have been coming down, and that in China, something has been changing in the way they store oil.
Yeah, that's right. We had a massive buildup of inventories during the lockdowns back in April and March. And we've only retraced maybe a third or half, somewhere in between of that overhang. So there's still a lot of extra oil compared to before the pandemic. But when you look at where the oil is, it's almost entirely in China. And China has increased its storage capacity over the years, very much over the last couple of years. So it has a need for more oil. And really what it did is take advantage of the pandemic to fill up its new capacity. You know, there was two stages in the Chinese buildup. First, during the lockdowns because of low demand. But then after they came out of lockdown and the rest of the world went into lockdown, they started really sucking up all the extra crude on the planet to fill up the capacity. So they have storage capacity, they have new refining capacity that needs oil. And President Xi has very explicitly called on the oil companies to build up their reserves and to build up their capacity. In response partly to the Chinese-US trade war, there's a feeling of a need for more energy security and import independence. So you have a market that's really rebased in a way. You know, stocks are higher, but prices are back to pre-pandemic levels. That means that there's really more acceptance, more tolerance for higher stocks, particularly in China.
What, broadly speaking, I mean, we know that oil demand is still down, gasoline consumption in the US is still down, aviation demand still off in spectacular fashion, as Shell's CEO just reminded us. Is global demand coming back, though, in a convincing way?
It's starting to. You know, it's first of all, demand took the biggest hit in its history, but not quite as steep a hit as was initially assessed. You know, when you go back a year, people were talking about 30% reduction at the peak of the lockdowns. We never saw that. We saw some resilience in some areas of demand. Diesel demand has been quite robust, quite resilient compared to gasoline, for example. Jet fuel has been hammered, but it hasn't been hammered everywhere. You know, we track jet fuel demand in real time in every airport, for every airline, for every category of aircraft. And we've seen strong demand in places like Cincinnati, like Memphis, like Alaska Anchorage, places that are hubs for FedEx, for UPS, for Amazon. So the oil market is changing, and there's been severe impacts on demand, but not everywhere, not across the barrel, and not across all geographies. Some countries have done better than others, and Chinese demand has really picked up quite a bit. It's easing off a little bit now during the new year, which normally is a high demand season, because the government has asked people not to travel back to their villages, and many people seem to be complying with this request. So there's a little bit of a dip, but that's a temporary dip.
Here in North America, of course, we tend to have a very inward focus. Sometimes we don't pay enough attention to the rest of the world. We've been talking endlessly. We talk endlessly about our own oil sands. We talk an awful lot about the US shale. Has the US shale been such a revolutionary factor in the oil market over the past few years, or has it been exaggerated?
Yeah, of course, it has been. I mean, it's been the steepest growth in the history of the oil market, you know, from any single country over a short period of time. But it's been very, very important in the recovery or the response of the oil market to the price collapse and the pandemic. The response of shale producers back in the last few months, in May, June, July, even April, was much faster than it had been after the oil price collapse of 2014. So the shale is changing. There's been a lot of restructuring, a lot of consolidation. The demand from investors and lenders are changing as well, and the behavior of the shale industry is changing. We've seen essentially the U.S. participate in the cuts de facto in the OPEC plus cuts and in the G20 agreement of last April, and I think it's changing a lot. Another thing that we're seeing as a big factor of change is the new call on lower methane, and this was kind of this fell in the background under President Trump. Now with President Biden, methane is back on the agenda, and I think reducing the methane footprint of shale oil in the Permian and other basins is going to be very high on the agenda in the next few months.
Now that's interesting. That kind of brings us on. You guys at Kairos, you do like to use satellite data. And satellites, perhaps in another context, have been used more and more to spot methane pollution. We'll just talk briefly. I mean, we're getting a better handle on what methane emissions from the oil and gas industry are like. I mean, before we were relying on self-reporting in some cases. That's right.
Yeah, there's been a sea change. There's been a revolution in the technological capacity to monitor methane. We at Kairos, we developed a tool called Methane Watch. Essentially, the foundation of our tool is monitoring satellites from the Copernicus constellation satellites from the European Space Agency. So these are monitoring satellites that monitor the Earth constantly with a very high revisit and globally, looking at the planet as a whole. And we think this is very important to monitor methane because most large methane emissions, almost all of them, are intermittent. They don't go on all the time. So you have to watch all the time everywhere to be able to really assess the methane footprint of any field, any company, any volume of oil and gas. But to that, we can add also signals from ground sensors, from aircraft, from drones. And we integrate all these numbers to get a pretty precise picture, a very accurate picture of methane events, their volumes, and their sources. And I think this is going to change very dramatically the footprint of the oil sector, but also enable the oil and gas companies to extend their license to operate in a lower carbon economy. And in the end, extract value for good performance.
Yeah, I mean, that's the thing. They're wasting. Sorry.
Yeah, go ahead.
Sorry about that. Because they're kind of wasting gas by letting the darn stuff leak out. Yeah. Just give us your view on the Canadian oil sands. I mean, our oil exports to America keep climbing. They're at or near record levels, well above 3.5 million barrels a day over the past while. We're in a special position, I guess. Our reserves pretty well last forever in our oil sands anyway.
Right. Well, there's a great appetite for heavy oil, right? Heavy oil was expected to be in surplus a few years ago. And now we've seen dramatically falling production in Venezuela, production constraints in Mexico. There's a great appetite for heavy oil in Gulf Coast refineries that have been configured for that kind of oil. You have a lot of cokers that need feedstock and so on. So, Canada is interesting because the oil sands have been targeted as a source of pollution and a concern for the environment. But at the same time, Canada is really pushing very, very strong environmental standards, climate standards, holding up companies to those standards. So I think we haven't seen the end of the industry. I think Canada has a role to play in supply as long as it can really reconcile the need for very robust environmental standards and climate standards, as well as continued production at an economic cost.
Antoine, we'll have to leave it there. Thank you very much indeed for joining us. That's
Thank you.
Antoine Halff of Kairos, formerly Chief Oil Analyst at the International Energy Agency.